Hi there, welcome to Kneppy Invest and welcome to a special Appendix 4C standalone video featuring 5 companies on the ASX who release interesting or intriguing Appendix 4Cs on the 24th of July 2025. Now these are not in any order, not ranked from 1 to number 5, but I'm going to start this video looking at a company called Farm Pride. Now, I do know this company exists, but I'll be honest with you, I've never had a look at this company in the past. Seems like they have something to do with food and eggs, based off the word farm in their name. And also, this is a website, and they just talk about eggs. Lots of things about eggs. Pride in every egg, egg facts, something good. An egg is for breakfast, egg whites. So I'm assuming they do, I wouldn't say manufacture, or grow eggs, because that's what chickens do, but I have a feeling they have a lot of things to do with eggs. Some of their products include egg stuff. If you just take your time, Farm Pride. Fresh eggs, free-range eggs, barn-laid eggs, cage-laid eggs, egg products, whole egg white, egg yolk, scrambled eggs, fried eggs, finest boiled eggs, carton packaging. So before I actually had a look at their website, I probably would have just said this company manufactures food, and that's about it. Okay, so why am I talking about Farm Pride in today's video? Well, it's going to be quite obvious in a second or so. Now, the share price is down 1.67%, but that's okay. This particular Appendix 4C didn't blow me away, but it did catch my attention for one reason and one reason only. And if you do follow me and my videos, you'll probably know what that one thing is. And now, whenever I open up an Appendix 4C document, I skip all the commentary and I go straight to the numbers. I want the numbers to speak for me. Now, this company has receipts of almost $30 million. So it looks like they're selling a lot of eggs, lots and lots of eggs. In fact, for the year, they had receipts of almost $100 million. But more importantly, in this particular quarter, they were operating cash flow positive by $3.6 million. Now, that is taking into account, looks like a GST refund and compensation from Agriculture Victoria for avian influenza, which was $1.45 million. But if you take that away, they were still operating cash flow positive by over $2 million. Now, for the year, operating cash flow positive by $7 million with the help of this refund and compensation, which was $10.7 million. So this particular thing, this avian influenza, might have significantly affected them, and that is why they did get a fair bit of refund and compensation from Agriculture Victoria. Not a lot of spending when it comes to capital expenditures, so they were free cash flow positive. Another thing I always like to have a look at is just debt. And you notice in section 3, there is a bit of some amounts in proceeds and repayment of borrowing. So I did assume this company have a bit of debt. And yes, they do have a little bit of debt. So total financing facilities, $12 million, and unused financing facilities of $15.56 million. Okay. Sometimes I will have a look at commentary. I did not for Farm Pride, but what I do is, by the way, if they should have an about section. In fact, whenever a company releases a document, any sort of document, they should always have an about section. And they just mentioned here that their leading ASX is a leading ASX listed vertically integrated egg company. Yes. So from now on, I'll be thinking of Farm Pride as an egg company, because they are an egg company. So that is something I've learned today. In fact, just by going through this process. Okay. Now, what I always do, now I have this in a Microsoft Excel spreadsheet online on my other computer, but fortunately on OneDrive Live, I can actually look at everything I do in my spreadsheet, and it changes automatically. So what I always do is I put down a company's cash receipts through time. And what I'm looking for here is growth. Now, I don't need to see growth every single quarter, because sometimes you won't have that. In fact, if you go back 1 year ago, almost 1 year ago, there was a bit of a drop in receipts for Farm Pride from the June quarter to September quarter, but that was not necessarily a bad thing. Now, at the time, it might have been bad. But if you have a look at receipts growth, since I started following this company back in September 2022. Receipts have grown, and they've grown quite nicely from 17 million to 29.7 million. So this company is growing, and that is one of the things I do look for. Another thing I will look for when it comes to these sort of companies is just the valuation. So Farm Pride has a market cap of 68.1 million, so nothing too stretched. So not the sort of company that I always look for as being a wealth generator or wealth creator, but maybe there's something in eggs. I have no idea. Now let's have a look at the chart. This where it could become interesting. If I see an intriguing chart like this, I do actually pay more attention to a company because the chart tells a lot. And this is actually a really nice chart from sort of the end of 2024. So over the past year, in fact, the share price of this company has gone from 10 cents to 29.5 cents. So share price has tripled in 1 year. So this company's chart looks good, their financials look good. So a lot of things going right for Farm Pride Foods. And I'm a little bit surprised, well, maybe not. I was going to say I'm a little bit surprised. This is the first time I've really had a look at this company, but just because of what they do, agriculture, it's a hard business. I sort of understand why I've not had a look at this company before, but today that has all changed. So Farm Pride Foods, ticker code FRM. Now on to the next company. It is EPX. I know the ticker code. I think it's EP&T Global something. No, it's EPX. I have no idea what this company does either. So a lot of times when I have no idea what a company does, I just Google the company. And I'm just hoping the company has, here it is. I think it is EP&T Global. And I think they must have changed the name. EP&T Global, I think they just changed the name on the ASX to EPX. I could be wrong. You can go to the company's, no. What it might do is actually go to market index, and sometimes market index in the snapshot will have this line, EPX Limited, formerly EP&T Global. Okay, there you go. So EP&T Global. I still can't tell you what this company does. I still can't tell you what they do just by this homepage. They have a platform, so I'm just thinking there may be a bit of a software company, SaaS company, edge platform, edge capabilities, solutions, sectors, commercial offices, hospitality and hotels, retail, shopping centers, healthcare and hospitals, functions, financial, sustainability, facilities. They also have some case studies. So I do actually at times like case studies because it can actually tell you exactly what a company does, but these are videos. So I won't look at these videos right now. But of course, what you could also do is just go to the company's Appendix 4C and assume the company did have or does have an about section. And they do. Of course they do. So EPX, the most trusted building efficiency platform provider, a data as a service platform that delivers sector-leading cost and energy efficiencies in buildings, a global leader in reducing energy costs and delivering energy efficiency in the built environment. There you go. So sort of a software company, but I wouldn't have thought about building efficiency, but there you go. So why has this company come onto my radar? Well, it's quite obvious. Probably not as good as Farm Pride Group in terms of receipts, almost 5 million, and for the year, 18.8 million. And the company was operating cash flow positive, 417,000, and also 1.4 million for the year. So this company is operating cash flow positive, and for the quarter, and free cash flow positive, and for the year, operating cash flow positive and free cash flow positive, albeit a very small amount. So free cash flow positive by about $18,000. So not a lot. Not a lot at all. In fact, you probably could argue they were not free cash flow positive. Of course, the next thing I always look at is debt. So they do have $124,000 of debt. Meh. One thing I do look at in Section 7 is the particulars of the debt. For instance, the loan facility is held in Hong Kong with HPC. And the loan tenure is 60 months, unsecured, and the interest charge is 3% per annum. That's pretty good. That's pretty good. Okay, so let's have a look. Now, this company did have a lot of commentary, which I've not gone through yet. So, for instance, they completed 4 consecutive quarters of positive operating cash inflow. So I can see why I look at that sort of thing, because it's the #1 highlight section for this company's quarter. Operating cash inflow For June quarter, 400,000. 12-month rolling operating cash flow of 1.4 million. So they're not talking about free cash flow, just talking about cash flow. They also talk about cash receipts and how it's increased over the past quarter, corresponding quarter. Cash on hand, 1.3 million, which I didn't have a look. But you can go through the rest of this particular commentary. They're talking about operating cash flow rolling 12 months. It's improving. So things are trending in the right direction for this company. Cash receipts from customers and net operating cash flows. So you can see just what they're talking about is exactly what I always look at in these Appendix 4Cs. So cash receipts from customers and net operating cash flows, improving. Cash receipts, there you go. This is interesting what they've done here because this can point out any sort of seasonality. It doesn't look like there is any seasonality. And you'll be able to see this seasonality when we have a look at one of the other companies in this video, that is Alcidion. There is definitely seasonality when it comes to Alcidion, but for this company, not so much. And what we want to see is that blue bar higher than the other ones, and exactly what we see. Staff cost ratio. So this is important when we talk about operating leverage. And they just keep on going on. So, of course, the next thing is the cash receipts history, which is something I always look at. In fact, let's have a look at this company, EPX. And there it is. Cash receipts history for EPX. I might just decrease this size. There you go. Just so it's not that big. There we go. So this is EPX, EP&T Global, as I used to call it. Cash receipts history since, well, over the last 4 years. Yeah, 4 years. And in fact, cash receipts have more than doubled. In fact, almost tripled from 1.8 million up to 5 million. And it's a pretty steady upwards climb in the cash receipts. And the most recent quarter, this quarter, was a record quarter. First time receipts have approached $5 million in a quarter. So EPX, maybe another company to put on your watch list. Company has a market cap of only 17.81 million. So there's not a lot of interest in the market when it comes to this company. However, in saying that, share price is up 22.73%. So it seems like the market may have caught, although only 11 trades, by the way, so not a lot of trading. So maybe the market has paid a bit of attention to EPX today. So let's have a look at the chart. Is this getting excited? EPX exciting? Is this a breakout for EPX? I'm just wondering when they change the name. And the answer to that question is no. Now, at least the downtrend has come to an end. In fact, you'd say the downtrend came to an end back in 2023. So share prices have been going sideways for about 2 years, which is, it can happen. You can see share price going sideways for a long time after a long-term downtrend. Share price as high as 21 cents back in 2021. I don't mind share price going sideways like this because if the company does keep on growing and become more and more operating cash flow positive, free cash flow positive and profitable, and if the company doesn't really break out, this will be considered a cheap stock, a cheap company on the ASX. So maybe a company to put on your watch list. Okay, another company, a company I do own. In fact, the only company I own in this list, and that company is Bioxyne. Share price only up 6.4%. Not surprising. Well, share price has been as high as 5.3. They announced a webinar on the 28th. No, they announced there was going to be a webinar on the 28th of July. And in this particular announcement, they mentioned that before this webinar, they will release the Appendix 4C. And I was thinking that means they'll release this Appendix 4C on the same day. But no, they did not mention they would release this report on the same day. They just mentioned they will release it before. So for instance, the company will review Q4 results and the quarterly activity report for Q4 will be released prior to the webinar. So yeah, they could release it anytime they want. I did expect a really good quarter from the company and they delivered. It was another upgrade, by the way. So this company has released a couple of upgrades recently. So revenue up to 9.5 million. We'll have a look at receipts in a second. So 204% growth on the fourth quarter 2024, 33% increase on the third quarter. Cash receipts of 10.7 million, 302% increase, and 26% increase quarter on quarter. Revenue of $29.3 million, exceeding the revenue guidance, which was $28 million. So exceed that by 1.3 million. And then they also mentioned entry into German market with cash on hand of 7.6 million. Now, I'll talk about this, a little bit of commentary as well. In fact, I did not do what I usually do. So whenever I go have a look at Appendix 4C, I go straight to the numbers. So I did expect about $10 million receipts, but it could be higher or lower depending on timing. So 10.692 million was a nice level. Operating cash flow 1.554 million. Now, I was hoping that was going to be a little bit higher, but that's okay. You can see for the year to date, $32 million in receipts and operating cash flow positive by 6.174 million. The company is also free cash flow positive, so everything is moving in the right direction. Do they have any debt? No debt. So that's all I'm going to talk about. They also have a revenue by quarter. So you can just have a look here. So in this particular announcement, they do talk about revenue, but they also talk about cash receipts, net cash from operating activities, how that's climbing. So sometimes I don't have to look at my nice little Microsoft Excel spreadsheet because they have these nice little diagrams in it. What do you call these? Not tables, graphs. We'll call them graphs. Okay, so Bioxyne. And let's have a look at Bioxyne's cash receipts history. Now, I took a position in Bioxyne about a year ago, maybe. About a year ago. And I'm just going to change this slightly. What I'm going to do is I'm going to increase that to 18. And, oh, it's already bolded. Okay, so I've been following Bioxyne for well over 10 years. And the very first quarter I looked at Bioxyne was in March of 2013. So what I've done with this graph is I've eliminated a long period because this company did nothing for a long time. And originally, when I first started following them, they were all about probiotics. They were selling probiotic stuff. And then they made a little bit of a transition. They bought a company that had to deal with hemp or marijuana or whatever you call it, cannabis, whatever. And whatever that company is, I can't remember what it was called, that has been really successful. That was a really good acquisition. And you can just see that by looking at the cash receipts growth. It has exploded the last few quarters. And I must have taken a position on the release of the September quarter. So maybe in October last year when I bought some shares in Bioxyne, just based off this one quarter. That's all I needed. And in fact, they've almost doubled their receipts since then in 2 quarters. So a beautiful cash receipts history. So things are definitely moving in the right direction for this company. So let's have a look at the chart for Bioxyne. I was really nervous when I bought shares in Bioxyne because the share price was 1.2 cents. In fact, I bought in September. So I bought before. I don't remember why I bought. They must have released something. So 2030, it must have been the end of year results. I must have bought on the back of that, not the quarter results, but on the back of end of year results. And I found something to really like in those results. So I bought at 1.2 cents, but I was quite nervous when I bought at 1.2 cents because I don't like holding companies whose share price is below 1 cent. And share price briefly fell below 1 cent in early October, fell to about 0.9 cents. But then the share price went on a burst. Share price quadrupled, went to a high of 5.2 cents in February. The share price pulled back, and now the share price has moved into another beautiful uptrend, and the share price has reached either a long-term high or an all-time high today at 5.3 cents. The other thing I really like about this chart is the volume. Some really nice volume has been coming in since June. These spikes in volume, that's a good sign as well. So I do like this chart. And I'm not even thinking about selling. Okay, so that's Bioxyne. I was going to say coming in number 3, but this is not in any order. Okay, now on to Alcidion. Okay, this is going to be interesting. So after open, the share price was up about 15%, and I was just wondering if the share price has pulled back. Only up 2.1%. Now, this is interesting because I wouldn't mind taking a position in Alcidion. There's a few reasons behind that, but I think I could be patient, maybe. I'll tell you why. Our share price did get to a high of 14.5 cents today. I'm not surprised we have seen a little bit of selling. And I'm not surprised there was initial really positive reaction to this particular Appendix 4C. And I'll show you in a second why. But earlier I mentioned EPX is not seasonal, just based off the receipts. This company's receipts are highly seasonal. You can definitely see that when we have a look at their graph. Okay, first thing I always look at is cash receipts. Now, I did know that this particular quarter, the June quarter, tends to be by far the best quarter in terms of receipts. Now, it's not the number, it's not the operating cash flow, it's how the receipts compare the previous corresponding period. Have they grown significantly? And we'll get into that in a second. So, receipts to customers, 22.37 million. And you can just see the year-to-date, 50.8 million. So 28 million receipts in the first 3 quarters, 22 million in this particular quarter. You can just see the last quarter tends to be by far the best. Now, $7.4 million in operating cash flow this quarter, 5.8 million for the year. So this company is operating cash flow positive. But that's not the end of the story. I always look at capital expenditure, not a lot there. And for a lot of software companies, I look at the intellectual property or non-current assets, because a lot of times they will capitalize research and development, and that could actually really, what's the word? I wouldn't say manipulate. They can, there's a word I want to say, but it can mislead how a company is performing. You might have a look at the operating cash flow of these software companies, and it's pretty big, but then you have a look at the cash flow or the free cash flow, and if you include their capitalized research and development, which is in intellectual property, I had to look at Qoria for this, Qoria, in one of my previous videos, maybe yesterday or the day before, and they were highly operating cash flow positive, but highly free cash flow negative because of that. But you don't have to worry about that for this company. So this company is free cash flow positive by a fair bit, and I think that's going to grow. Okay, debt. They have a little bit of debt, but not too much. So $37,000, not that much at all. Okay, so what else? They talk about all the things I've already talked about. Talking about operating cash flow for the quarter, for the year, how it's improved. Talking about TCV sales, annual receipts, that sort of thing. Cash balance, which I did not have a look at. No debt. Well, they did have a little bit of debt. And reconfirming financial year 25 EBITDA guidance to exceed $4.5 million. They also have a nice little graph here. Cash receipts. Here we go. But what you might not realize here, have a look at the fourth quarter and compare it to the first quarter. You can see how the fourth quarter is significantly greater than the first quarter, but it's not quite as apparent here as what I'm going to show you in a second, and that is the cash receipts history. And you can see the seasonality when you look at the cash receipts this way, which is one of the reasons why I like doing it this way. Okay, so we got to get it right. There it is. So this, I started following this company back in 2016, and I'm pretty sure they've changed their business model. So maybe I should get rid of the first few years just to make it less or bigger or nicer. Anyway, so you definitely, particularly in the last few years, you can definitely see some seasonality here. So the June quarter tends to be by far the best, and the first quarter tends to be by far the worst. So you have to compare the previous corresponding period, and you can just see it going up, 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 then down, up, 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 then down, up, 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 then down. So the expectations were this was going to be a really good quarter, and the expectations, the next quarter is going to be really bad. Last quarter, the receipts went from 18.6 million down to 6.3 million, then 9.1, 13.1, 22.4. So I fully expect the next quarter to be maybe $7 million, maybe $8 million, and they will be operating cash flow negative. So keep that in mind. And that is why I'm willing to be a little bit patient with this one. Now, in saying all that, when we have a look at the chart, I'm just going to see if the market did react negatively to their first quarter results. So this would have been released in October. I just want to see if the share price did drop in October when they released those. So no, we don't see any big drop. No, there wasn't much of a market or negative market reaction. Now, I do like this chart. I really like this chart. And I also like where the company is sitting right now in terms of financials. The share price has pulled back today. If I see the share price pull back to, say, 11 cents, I will take a position. I've decided already. If the share price falls to 11 cents, I will take a position. Ideally 10 cents. And I should have done this the other day. I was thinking of doing this the other day, but I didn't. So 11 cents, if I see it pull back to that position, I will take a position. Ideally 10 cents, but I'm willing to buy in at 11 cents. Okay. And finally, we have RLF AgTech, I think it's called. RLF AgTech. Share price up 21%. So there is a running theme among all these Appendix 4Cs. And let's have a look at this company. I've got to remember what I've looked at this company in the past. Agriculture. They provide nutrition for agricultural stuff. Land nutrition, stuff like that. RLF AgTech. We'll have a look at the website. Empowering our farmers, nourishing our people, restoring our earth. Oh, that's brilliant. Our world's first plant proton delivery technology aims to solve some of the world's biggest agricultural, environmental, and human challenges. Our solutions. So product C primer, cell and fertigation, foliar. So some of these I have no idea what they are. They have a few businesses, I suppose. I don't like this definition of who they are. That doesn't really explain what they do. All I know is agriculture, nutrition. So let's go to their document and have a look at their about section, just to see what they say in a more succinct manner. And I'm hoping they do have an about section. I'll be so upset if they don't. Here we go. Here it is. About RLF. Plant nutrition company that formulates and manufactures advanced crop nutrition products designed to improve agricultural productivity, crop quality, and soil health. There you go. That's all I need. That's all I need. That's what you do. Then they go on a fair bit after that. Long-standing operations in China. It's okay. But anyway, let's have a look at this. A lot of information here, by the way. They have a lot of pages of commentary. Lots and lots of pages of commentary. But let's have a look at the most recent Appendix 4C. Why I'm talking about this company in this particular video. Receipts, 8.9 million. Operating cash flow positive, 3.9 million. I was like, whoa, okay, that's pretty nice. And they didn't get any help from government grants and tax incentives. A little bit there, 29,000. Interest received, 3,000. And for the year, receipts, 26 million. And operating cash flow, 803,000. So possibly the company has turned a corner, maybe. This is some really nice growth towards the end of the year. If they sort of replicate 3.9 million in operating cash flow for the whole year, that'd be wowzers. But the question is, can they do it? They do have a little bit of cash on hand, 6.5 million because of this great quarter. Any debt? A little bit of debt, $3.7 million of debt. Okay, and if you go through the commentary, they do, they talk about this strong June quarter finish. What else? Full year positive operating cash flow. You can just see they talk about the same things I look at. Customer receipts growth, and then they also talk about Australian business momentum, China growth rebuild, Asia market expansion, and a lot of commentary here. So if you really like what you hear, have a look at this commentary and also have a bit of an outlook section. Okay, one little red flag I did have when it comes to RLF technology or AgTech is if you have a look at the cash receipts history, which is right there, not much history. There is a bit of lumpiness. In fact, you can see receipts going up and down, up, down, up, down, up, down, up, down, up, down. In fact, that has been the trend throughout this period. Whenever you see a really good quarter, the next quarter is down, or receipts are down a significant amount. In fact, you can see receipts going from 9.7 million down to 2.5 million, back up to 8.9 million. So my expectations for the next quarter is receipts will be down, but I have no idea how much lower they will be. They could be back to $2 million. I don't know. So that's my one little red flag about RLF is how reliable are receipts, and you want to see a more smoothed out increase in receipts than what you see here. So that's RLF AgTech, a nice increase in receipts, but if they have actually another increase in receipts in the next quarter, that would be way more interesting. Okay, now onto the chart, and I'll be honest with you, most of these charts look pretty good. So Alcidion looks good, Bioxyne looks good, Farm Pride looks good. I can't remember EPX, maybe not. This one looks really good as well. This one looks really good. I had a look at this chart earlier in the day, and I love this chart. So we had the share price going sideways for the longest time, as Billy Joel once sang. So 11th of June 2024, share price started going sideways. Share price tried to go on a run back in March, but failed. Share price popped up on the 17th of July by 33%. Did they release anything on the 17th of July? They did. Growth business update. Did I miss that? I can't remember talking about it. Might have missed it. And it seems like that must have been received well by the market. But looks like portions of the market completely missed out, because after that share price went sideways, that was the time to get in. And now the share price is up another 20%. And the share price has broken out. Really big volume 1 week ago on the 17th of July. So the volume hasn't been as big today. That's another little bit of a red flag I have for RLF. The other thing is, have a look at the volume at the start of 2025. Look at that big volume coming in between January and March. And that was another good sign that bottom probably had been reached. So there was interest in this company. You can just see that by the turnover. Okay, that is all I have for this particular special video. Now, I was thinking this video might go for 15 minutes. It's gone for 31 minutes. There you go. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.